Hello and welcome back. Thanks for joining us at Crux Investors. We've got Alex Black and Hayden Lott here talking to Matt Gordon about the Chilean landscape, how it's changing, why we're all very positive on it. Welcome, guys.
Oh, that was good. That was good. If mine doesn't work out, you've got a job here. Hayden, Alex, thanks for joining us. We kind of made contact, reached out to you guys, just want to try and understand what's going on over there in South America. Lots of sort of quite negative narrative coming out of there, and obviously Chile, no exception with some of the commentary around the politics there. So we're just going to catch up on that and maybe touch upon a few of the other kind of big topics of the moment around funding and ESG for mining at the moment. Because why don't we kick off with the politics though? Alex, you and I had a great conversation a few weeks ago, and we put out an article, put links to both of those below with regards to what's happening. Now, you made a prediction. Did you get it right?
Well, it wasn't a prediction. I'm not Nostradamus, as Hayden might like to say. It was based on information that I dug up in conjunction with our independent legal counsel and other people in Chile about where the process was going, and the fact that nationalisation of the mining industry was just not on the agenda at all, and would never make it. Obviously, it was discussed in the constitutional reform process, but it just didn't make it. So it was just providing everybody with some background as to what the constitutional process was all about, and to help them see that Chile, wasn't turning 180 degrees to a country that we don't recognize anymore. I mean, Chile has been at the forefront of mining in Latin America for the last 20 to 30 years. I don't think there's any real change to that. But saying what I did in that interview was just to help people understand the process of what was being talked about within the country.
Okay, so you turned out to be right. So it may not be Nostradamus, but you called it correctly. However, the markets turned at exactly that moment. So there was no kind of benefit or upside to that outcome. Well, certainly not for Chilean miners or any investors looking into Chile. So Hayden, how do you call it? Do you think there eventually will be some sort of benefit or recognition of what actually the outcome was, and this kind of negativity will go away and investors will come back into country?
No, 100%. But the news that Alex was talking about, where the nationalisation agenda was rejected, and some other sort of proposals that would have weakened property rights in the country were rejected, are undeniably positive. And it's just unfortunate that the global market decided to take a leg down at exactly that moment. But eventually, as with all things, the pendulum will swing back and we'll see renewed interest into what we think is a 10-year copper cycle, an incredibly important new commodity super cycle.
It's kind of interesting because we've been at a few shows recently talking to a few investor groups, institutional. They're taking advantage of the situation. They're seeing it as an opportunity to actually load up. But retail aren't there yet. I mean, are you seeing that too, Alex? Is there still a nervousness with some of your shareholders? What's your inbound telling you?
Yeah, look, I mean, retail is pretty skittish, as we all know. And, the resource sector has a lot of competition from a retail investor perspective. We have Bitcoin, we have, every other part of the general market that people can pile into and invest in. And then you've got the resource sector. And obviously people look at the gold price, and Hayden's in copper, I'm in gold, but, gold's been quite a good performer given the underperformance of the general market in the US. Gold's been pretty resilient around the 1850 mark, and has outperformed the general indexes for the year, because they're down, I don't know, about 20 odd % or so. So, but unfortunately, when the general market goes down, and particularly in our case, we've got quite a lot of US retail shareholders. When the general market goes down, our stock gets sold down as well. And then, when that market recovers, people come back into the stock. It's really funny, and it's very, very volatile. from our perspective.
Right. So sorry to interrupt, but if I'm looking at the metal prices out there, it's been a great 18 months for across the board. I can't think of anything that hasn't benefited over that time. However, there's a real divergence between the metal prices and equities. Partly because there's a kind of mass downtrend in the market across all verticals, technology, biotech, science, everything is down at the moment. People are a little bit nervous. What would your recommendation be to retail about how they should look at the metals market at the moment? Are they right to be risk off, cash in hand?
Well, in my opinion, there's a lot of factors out there that are still out of everybody's control. What's the Fed going to do? What's going to happen to interest rates? What is the value of holding cash going to be in comparison to those influences? So, the resource sector is a very tiny market when you compare it to everything that people can invest in globally. So, we just get bounced around. It's like being a little ball on the sea, in a storm. So I don't have an answer. And I try and tell retail, I don't try and tell retail what to do. What I do say in our case, in our story, and probably the same in Hayden's story, is that you need to have an investor mentality about our story. Reason being is, we're building a mine, right? Hayden's going to do a feasibility study and then he's going to build a mine. We're building a mine right now and we'll be in production next year. So you have to be in it for the longer term. Whereas, as you know, retail and a lot of stocks are there for, the good news and, maybe make some money and move on to the next story, etc. That's not going to happen with our story, right? What we hope will happen to our story is what you see with companies like Orezone, who are just about completed their build in Burkina Faso, is that they've had a re-rating over the last 12 months. Because they're firmly into construction and firmly going to be in production by the end of this year. So hopefully that happens to all of us. And Hayden's going to do his feasibility study. He's going to get more certainty about what his project looks like. He's going to go into the EIA process like we are at the moment. We're at the end of our EIA process. So, retail investors have to look at that from a longer term vision perspective, I think, in the case of our two stories.
Okay, well, Hayden, let's come to you. Come on, you've worked on the finance side as well. You've walked those streets. Some retailers saying to me, "We're going to wait. We're risk off. We're going to call the bottom right, and then we're going to plow back into the space." I mean, as a strategy, what do you think?
Well, to look at the greatest investors on earth on their belief on whether or not you can call the bottom or call the top in any way, shape or form. I think you've got to ignore the short-term noise, which is what's happening right now. And you've got to take a step back and say, what do I believe is going to happen in the next 10, 15 years? And, as I think you had an interview with Ross Beatty at one point, and he talked about geopolitical risk as one example of investing in mining. You have to ignore the short-term noise because it is like a pendulum in a cyclical market. It will swing back in your favor at some point, and it's about picking the best assets. So from my perspective, I'm looking at this as an opportunity, and all the things that I thought were looking expensive previously are now looking much more appetizing for me personally, outside of my own story, Marimaca. And in the long term, I keep coming back to, if we really believe that we're going to try and decarbonize the global economy, and we really believe that inflation is here, what are the best things for you to own? And they are real assets.
Okay.
And so the investment thesis remains.
Okay. So investment thesis for copper, well understood. Investment thesis for gold, well understood. However, the rules haven't applied really in the last 18 months. Like I say, this is a divergence between metal prices and commodity equity prices. So what are the things that, again, for retail, for high net worth, for family offices, what should they be focused on? You've talked about, being the story for the long run, Alex. You're talking about the re-rates that you get when you sort of move towards production, which you will see and Hayden will see in your stories. But right now, what's important and what's not? What are people getting distracted by, and what should they be focused on? Alex, that one's for you.
What are they getting distracted by? There's just too much information out there. There's too much noise. That's what I see. And look, I'm an older guy. I'm a boomer. Obviously active in social media. I look at social media quite a bit and follow what's going on. And there's just too much noise. And the old days of, I remember when you had to go to a stockbroker and buy a share and you get a share certificate and all those. I mean, all that romance about owning a gold stock or a metal stock is gone. Now it's just a press of a keyboard. So I don't know the answer to that.
But isn't more information more information? I said more information is good. More data points are good. Or are you saying actually
we're information in a pool of huge, infinite information. I mean, there's just so much information out there about the world, right? And once again, we're competing, right? The gold business competes, and I've said this before, and I think we've had a conversation about this in a group chat somewhere on the way about the World Gold Council and how what are they doing for the industry to compete against other alternative investment opportunities like Bitcoin, who've just come out of nowhere and it just caught the imagination of everybody from a 15-year-old to a 90-year-old. So all this noise, that's what I call the noise, is taking a lot of focus away from us. I find it quite amazing that you have senior producers in both copper and gold, predominantly in gold, who have been year after year over the last 3 years, for example, have generated record cash flows and profits and cash in general, who are just getting ignored, right? Just getting ignored by the market. So obviously, why are they getting ignored by the market from a valuation perspective and a share appreciation perspective is because there's just too much other stuff out there for people to invest in. That's my, very basic opinion.
Okay, so but there's too much noise, too much data, and too much distraction. So come back to my point. What is the thing that is important? The fact that companies like both of yours, which will get into production, is that what they need to be looking at? I mean, and if so, how do you spot the companies which aren't able to get into production? I mean, Hayden, do you want to have a crack at that?
Well, I think information is actually a benefit in that sense. But, I think if I take a step back and look at what's driving short-term decision-making at the moment in a large degree, and I think I would split it between retail and institutional, but the retail is fear. Right now, everybody's watching their hard-earned dollars go backwards and they're thinking, well, God, I don't know where the world's going to go next. And so maybe I'm thinking about selling rather than buying, which is the complete opposite of the advice of if you read the best investors in the world, saying that now is the time that you should be looking at the high quality stories and adding to your name. And then I think on the institutional side, and particularly on the generalists, because the point Alex makes is a very good one. Mining is a small subset of the global investment economy. And as a result, generalist investors don't look at mining almost until it's too late, almost until the horse has bolted and we're into a super cycle and they're then chasing the money and putting money to work, which will have an impact at some point. But I think one of the things, and it was an older fund manager who is exceptionally experienced gave me this anecdote. He's like, a lot of these new fund managers have never experienced the cycle like we're going through right now. And at the moment, they're just sitting thinking, what the hell do I do with my exposure to Amazon, Google, the alphabet stocks, the FANGs that are down 20, 30%. And, even more of those stocks. I can't focus on resources yet. But that cycle, as we talked about it, the pendulum will swing back. And at some point, as this commodity super cycle takes off and inflation remains, an ever-present part of our life, they are going to have to start looking at real assets. And we saw it in the last cycle. They were late to the party, and they therefore drove the stocks even further. And once they started coming in with the bigger money.
Yeah, I totally agree with all of that. But I need to answer this question, because people watching this, they want some ideas, they want some clues, want some cues where they can, that are actionable, right? Which is, you said, the stories with stronger fundamentals, or the better stories. So, right. So how do they identify the better stories? Because there's a lot of stories out there. Okay. So I take the point that mining is a small subset of all of the possible ways that you could go out and invest. I think all mining companies is equal to Apple in size. Okay. That puts us in context. We are, as you say, that small ball bouncing around the ocean, Alex. But within that, there are good players and some not so good players. Some people deliberately so, and others just by misfortune of circumstance. How do we spot the better ones? I mean, what are we looking for, Alex? It's easy for you. You've got the money you need. You don't need to raise any more money. You're getting into production, and then the cash will flow. But the higher leverage stories that some people may be looking for, it's a bit harder to spot the goodies. So give me some clues to what's important.
Well, you got to rank your companies, right? So you've got the producers, you've got the developers. Out of the developers, who's actually got the best chance of becoming a producer? We've had some disasters in the gold sector, so you got to try and find the right group at that level. Below there, you've got the exploration, right? And then from an exploration perspective, it's not just some nice holes that come out of various stories along the way. It's what is likely to become an economic deposit that could become a mine, that could become attractive to somebody else, or be put into production by that group. So, you got to rank your stories. But, if you look at the resource sector, I don't know how many listed companies there are in Canada at the moment. Let's call it 1,500. Probably about 50 of those are worth investing in, I think. You've got the Filos, right? The NGXs that are putting out some, ball terror holes. Great. They're going to become real projects in the future. Obviously dated, because, there's a lag between those drill holes and a mine. Mm-hmm. But obviously the premise there is they're going to get taken over by a BHP or a Rio Tinto, maybe, who knows. But, at the end of the day, they're great stories to potentially put your money into. But somebody who's drilling, silver holes in Mexico or in the middle of Africa or somewhere else and getting some nice results, drill holes don't make an ore body, don't make an economic deposit, and don't make a mine, right? So that's the problem. And unfortunately, for some retail investors who haven't been in this game for long, they don't know how to differentiate those, right? Those stories. So people pile into the drill hole stories when things are going well, and they either do well out of the flip or they burn their fingers. So I think you have to go through a ranking process personally.
Right. Made all the more difficult when we get mixed messages from miners. Okay. Grade is king. Grade doesn't matter. It doesn't needn't necessarily affect the economics. Scale is what you want. Sometimes scale doesn't work for you because technically it's hard to actually get to the metals you want. So you kind of got, and so on and so on. Big long list of contradicting messages about how you value, whether it be ranking in whatever way form you choose. So it's got to come to, well, who do you listen to? And this isn't a Crux investor plea for promotion or anything, but who should they be listening to? Who should they not be listening to? There are armchair experts out there. There are newsletter writers and brokers who have slightly different business models, which doesn't necessarily involve the company doing that well. It just involves the transfer of money from, retail to their pockets in some way, shape or form. So who should they listen to? What should they listen to? Hayden?
Yeah, look, I think on Alex's point, the way I have approached it and what I tell people who ask me for advice is, you need to identify people who have actually worked in the industry as part of your ranking system. So, those people who have got experience either in geology or mining or metallurgy, or ideally all three, and have been involved in and bear the scars of having taken a company from a discovery through to, construction and into a mine, because they'll be able to give you a very quick read. Look, this is worth spending time on. This is not. And everybody knows somebody who's worked in the mining industry. And short of that, there are plenty of good analysts and various broking houses who have come from a mining background who can give a good read for that. And then it's about talking to as many people as you can, in my opinion, getting differing views on it. You got to do the work. And and then thinking about companies. Some very wise old investors have told me that their first thing that they look for is a management team. The people are the most important part of a business for them before they even get into whether whatever it is will work. And so they spend a lot of time understanding the people that they're going to be investing behind, especially at the junior end of mining.
See, why
just coming back to what you were saying, Matthew, in respect to who to look for advice. That's a big issue. And that's part of this noise that I talk about. Because if you look at Twitter and you look at some of the people that are on there promoting stories and talking about various companies, etc., woeful.
And pushing their own barrel.
Sorry?
And pushing their own.
Well, most of them are making money out of bringing the sheep in and getting out while the sheep are coming in. They're getting out themselves personally, right? So that happens a lot. But the other thing is they're just clueless, right? They're just clueless. And I could name probably half a dozen of them that I've seen on Twitter that obviously I won't mention here. But, that's the issue. There's a lot of noise out there. And unfortunately, those people have followers. So not only do you have to rank and differentiate your mining stocks or stories, you have to differentiate and rank your promoters, right, that are out there, the independent groups. But, look, we talked about it earlier, the fact that there's more of these sorts of video interviews, et cetera, on various platforms, not only on this platform, but on various platforms. That's a good way, when you see somebody that you may never get to meet in person because, everybody's all over the world. It's a good way of seeing how that person addresses questions, how that person is interrogated by the interviewer, et cetera, et cetera. And that helps people, I think, visually make an impression about what they're potentially going to invest in.
I agree with that. And I think, and by the way, do feel free to just kind of riff off of each other. You don't need to wait for questions from me. I'm very happy to sit back and listen. But this is the bit I love about what we do, because I get access to guys like you who've been there, done it, created real value, not talked about it, but and working with teams of people who've actually delivered. Because I know from you guys off camera, what good looks like and what bad looks like. Alex, you're saying maybe there's 50 investable companies on the Canadian exchange, and maybe you're right on that. It's certainly a very small number, but you can see which teams will work, which teams won't work. You tell me about it well in advance, or you tell me some of the problems, not you, but some of the CEOs that I also respect, because it's obvious to industry players. If you've built a mine, you know what problems can and can't go wrong. If you've built a mine, you know when someone's making something up. But for retail, it's really, really difficult because we get this kind of facade put up by the companies, the storytelling, and it's difficult to kind of cut through that without the technical knowledge and nous and know-how. So I take your point, Hayden, very seriously, and I think other people should too, which is you've got to listen to people who have done it before, not learning on the job. Alex's point
is a really, really good one. Independence. Why are they giving you the information that they're giving you? Can you trust that they're giving you a truly independent, unbiased view, or are they telling you something in order to benefit themselves? That's the real risk of the social media world that we live in. It's useful to point you in the right direction. There are some exceptional guys on Twitter who are remarkably good at calling, things to buy into. Now, I treat that with a healthy degree of skepticism. The vast majority I would say, doing things for their own personal motives. And so it's important to have you do your DD on those people that you talk to.
Right. Well, let's talk about, so my point would be, it'd be great. You know who they are, Alex. You would love to call them out, but it's not worth the aggro, right? And
when I retire, I'm going to start up a platform called Cut the Bullshit.
Oh, yes. First subscriber here.
That's what I'll start calling people out. Because I actually, when I started on Twitter, I got a bit active on certain things, and I got a barrage of people all over the top of me saying, "You're a CEO of a mining company. How can you be, critical of anybody else who's a CEO of a mining company? And how come you spend time here on Twitter? You should be out there working and adding value to your company." I mean, it's so the minute somebody with a lot, 40 years of experience and background says something, boom. But then if some idiot, and there's lots of idiots on Twitter who have got lots of followers, says something, that's, Fred just said this, and we should all be paying attention to Fred because, well, he's just a wonderful person, But he's considered, when a CEO speaks up, we're considered to be non-independent. It's like we're trying to poo on somebody to make our story look better. That's not the case at all. It's trying to help people. And I do a lot of feedback privately because people reach out to me on Twitter privately and say, well, what do you think of this story? And I give it to them privately because they're owed that, from somebody who's got some experience.
Yeah, and I've been a beneficiary of some of that advice, so I appreciate it as well. I mean, Hayden, will you be subscribing to cutthebullshit.com?
100%. 100%. Be the inaugural subscriber.
Right.
Can't wait.
You're now going to have to go and buy that because someone listening to this will go off and buy that. Right. I want to talk about one more topic, which is a little bit hot and heated, and it's polarizing. And we've talked about it a few times, Alex, which is this whole notion of ESG is you go woke, you go broke, and so forth. You're from the camp of, look, miners have always had to do the things which is wrapped up in ESG to be able to get a project over the line. But this is a new wrapper for it. So am I unfairly describing your view of ESG?
Yes.
Okay, go on then. Go on and cut the bullshit. Come on, let's go.
Look, I think call it CSR, call it whatever you want. Over the last 40 years that I've been in the business, it's always been there. I mean, environment, social, and governance are keys to success, right? And different phases. I mean, in the case of my team, we built 2 mines before in Peru. We've covered all those off. We're doing the same in Chile. We wandered into Chile 4 years ago, didn't know anything about the country, and here we are. We're building a mine 4 years later. I think that's quite an achievement. And because we have our understanding of what's needed for all those. Now it's pushed out to the front where you have to talk about it and market it in a big way. And I'm thinking, because I'm seeing all these big companies do it, put out press releases about ESG report, ESG seminar, ESG this, ESG that. There must be some pressure, I guess, from investors. I haven't heard of it. I haven't seen it. I haven't had any investors say to me, well, we're not investing in your company until you have this big ESG profile. But, we're doing our thing. There are really good tools right now available to companies like us. We're using a tool called Onion, Onyen. So it's an app that a company can put in place, put all their ESG reporting into that, not have a special report, put it all in there, and people can interrogate the app externally. So that's something we're building up as a company ourselves. But it's just, to me, there's just been overblown. I don't know where the end of this is going to happen. But, like I say, ESG has been a part of the mining business forever, and hopefully this is not going to drain a lot of management time and energy away from doing what you have to do from the point of view of operating and building a mine, or developing a mine. So
right, but in a meaningful way, you've raised your money, you're funded through to production. In a meaningful way, I guess it doesn't matter for you anymore, or does it?
No, hang on, wait. But why doesn't it matter for me?
Well, in terms of the ability to go and raise capital, if you're saying,
but once again, we've raised some capital up until now. We've got, bankers and we've got a big streamer involved in what we're doing. I mean, I haven't had as a company, I haven't had a lot of pressure from any of those, and also the investors that put in some equity to have a massive ESG program. Obviously, the question has come up: what are you doing from an ESG perspective? We've been able to put that on the table, just like we have been able to do over the many years that we've been in this business, and they're satisfied. All I'm saying is it seems to be really put out there, and I don't know who it's placating. I don't know who it's placating. That's my question.
Well, yeah, and I guess so. Sort of to Elon Musk's point, I don't think he's necessarily a big fan, because he doesn't think it's actually being measured properly. So therefore, it's therefore an ineffective measure. So I mean, but for you, Hayden, you're kind of going through the process at the moment, the feasibility study to come, etc. You've got to pay careful attention to that. One, because of the funding component, but two, obviously, the ESG and everything that it pertains to it's really important for you to be able to get your project into production, on the ground, as it were. You've got to get that local support, etc. So, are you finding it a distraction? Is it a cost to you? Would you rather it wasn't there?
Well, no, similar to Alex, I think that it's always been in the mining industry, and it's becoming more to the forefront. Potentially slightly different take on it to Alex is that, as a relatively new entrant to the mining industry, I look at it as almost catering for the lowest common denominator. We're not targeting tier one management teams like Alex and his team, who have done it all before and know, and this has always been at the forefront of their mind. We're catering for the groups who don't focus on this in the way that they should, and therefore provide mining with a bad name. Because if you look at mining in general, it's a very small number of issues that give us the terribly bad name that we have as an industry. It's not the general consensus of the mining industry that ESG is not a focus. It's always been there. So for us, yes, it's taking more management time. Again, like Alex, we're using some new technology that allows us to kind of short circuit that a little bit to make it more efficient for us, especially as a non-producing company. The reality is our ESG framework should be much less rigorous than they will be once you get in, although there's still some rigor. So we're using Digby for ours, which allows us to give us a scorecard and show where we're doing well, points to gaps, tells us what we might need to do in the future. But I'm quite similar to Alex. When I started in the industry, we were already talking about social license to operate and the importance of environmental management back then. It's not that it's new, it's just that I think the world is enforcing on those groups that would potentially try to circumnavigate the rules. That's a requirement now in order to get the capital.
Right. And obviously the next part of the conversation inevitably leads to, this conversation inevitably leads to jurisdictional risk. Well, I think one of you's touched upon that already today. We've having the topic around Chile, and I'm trying to wonder, is Chile any more investable or less investable than any other mining jurisdiction in the world? I mean, your take on that, Alex?
Well, I think it's one of the better. I mean, one of the things we've been doing as a company is we've been looking at M&A opportunities, and we've broadcast that over the last 4 years since we've been in business. And we've looked at projects in North America, in different parts, different states. I won't mention the states. But when you look at the gestation period for a mining project in some of those states, it's 5 years, right? From the time you've got an ore body to the time you want to build a mine. And so, it's a process you have to go through in those particular states, and you've got state and federal requirements. In Chile, for example, we're at the end of our EIA process. Hopefully, in the not too distant future, and it's coming. I can tell people that are interested. We're waiting for our approval, and it's coming shortly. But when you look at the process we've been through, we started the EIA, we filed our EIA in April of 2020. It's now May of 2022. That's just over 2 years, right? And what I have to say is for the first 7 months, we went into a hiatus because of COVID. By a hiatus, I mean that the authorities in Chile put their pens down and wouldn't evaluate any new submissions because they didn't know how to handle that from working from home and all that sort of thing. So for 7 months, we were off the radar. So really, take 7 months off of 24 months, you're at 17 months. So let's call it 18 months. If we get our EIA approved in the next month or so, that'll be an 18-month process. That is moving pretty fast, and we've pushed pretty hard. So from a Chile perspective, what we're demonstrating is that, yes, it's been open for business. It's still open for business because we're now doing this over a change of government. We will have done it in a pretty quick time frame. And I think Hayden will be encouraged by hearing that because he's going to be launching into that in the not too distant future. So, I think Chile is a great place to do business. It's open for business. Certainly, there are some quirks in Chile, labor-wise, culture-wise, etc., that we have to understand and embrace and work within. But I think it's a great place to do business.
Hayden, that's encouraging, isn't it?
Yeah,
but you probably already knew that.
Yeah, agree completely. It is a really good place to do business, despite the headlines. And I think for all the investors tuning in, you do really have to look not just at the geopolitical, not just at the country as a whole, and lump them all in as one single risk, because there are specific risks in different areas of countries. If you're in the middle of a desert where there's nobody around and you're not impacting anyone, then the likelihood is you're going to have a shorter timeline to somebody who's very close to a large regional area, as an example. So I think you got to look on a case by case, project specific basis. Okay,
I'll just finish up here because I think we've got a lot of new subscribers who've come in from the technology space of wandering around trying to understand the vocabulary, what they should be looking at, trying to understand what good looks like, etc. Your final words of advice to them, Alex, as sort of the great uninitiated and unwashed. What would you say they should be doing? Sit back, take your time before you dive in, or are there opportunities for them now?
Take your time. Take your time, do your research. As I say on Twitter, do your DD, right? There's different ways of being able to do DD, right? There's different people you can reach out to, either publicly or privately on platforms like Twitter, etc. So just take your time, analyze the situation, see what's happening to the majors, see what's happening to the junior producers, see what's happening to the developers, try and understand the dynamic there, and pick your moment. As Hayden was saying, people are sitting on money now when they probably should be investing, but that's just the mentality of everybody right now, and I think there's a lot of people scared. So for me, it's just take your time.
Okay, and Hayden, same.
Yeah, exactly. I think for me, what was important in assessing projects that I've invested in is finding a mentor who I know personally, who I know is independent, who will give me that good advice. Hopefully somebody who's got a lot of experience. And, as Alex says, sometimes things are expensive, but as we're seeing right now, things become cheap quickly for no reason other than people getting scared. So, there will be opportunities, and being patient is the key.
Okay, well, look, folks, I think we'll wrap it up there. So if you're interested in companies with good, strong fundamentals, these two tick every box for me. So Marimaca Copper with Hayden, obviously, and Alex's Rio 2. Well worth having a look. And I'm sure if you'd like to ask some advice, both of them will be available for comments. Do feel free to email them. Okay, thanks, gentlemen. See you soon.
Thanks, Matt.